Most people have one primary source of income. While it's fine to have a single source of income, it can also be dangerous. What would you do if your primary source of income dried up or you lost your job? The COVID-19 pandemic is a good example of this. Many people lost their jobs or were furloughed. The unemployment rate spiked in April 2020 after business closures and restrictions began in March. By May, 23 million jobs had been lost cumulatively. This is the worst economic crisis since the Great Depression. As a result, millions of people experienced financial hardship, and savings dwindled while credit card debt soared. This is why having multiple income streams is so important. Having multiple income streams means you won't have to worry about losing one income stream if another one runs out. Besides the global pandemic, having multiple income streams is important for financial security. It can protect you from financial risks, such as job loss or illness. It can also help you grow your wealth faster. Before I continue, if you're new here, please hit the subscribe button so you make sure to never miss my weekly videos on wealth creation tips. In his book Rich Habits, The Daily Success Habits of Wealthy Individuals, Richard Corley analyzed IRS data and found that 75% of millionaires have multiple income streams. It makes sense that it's easier to pay off debt, save for retirement, and build wealth when you have multiple income streams. Millionaires know that diversifying their income is essential for wealth creation and financial security. In this video, we'll explore the 7 income streams that millionaires have and how you can start building your own multiple income streams. So whether you're just starting out on your financial journey or you're looking to take your wealth to the next level, this video is for you. Let's delve into the topic right away. 1. Dividend income. Dividend income is the money that you receive from a company when it distributes a portion of its profits to its shareholders. Dividends are typically paid out quarterly, but some companies may pay them out annually or semi-annually. Dividends are a way for companies to share their profits with their shareholders. They are a reward for owning the company's stock. When you buy a share of stock, you become a part owner of the company. As a shareholder, you are entitled to receive a portion of the company's profits. Dividends can be paid out in cash or in stock. If you receive a cash dividend, you will receive a check or a direct deposit into your bank account. If you receive a stock dividend, you will receive additional shares of the company's stock. Dividends are taxed as ordinary income. This means that they are taxed at the same rate as your wages or salary. However, there are some special tax rules for qualified dividends. Qualified dividends are taxed at a lower rate than ordinary income. Here are some of the benefits of dividend income. It can provide a steady stream of income. It can be a way to grow your wealth over time. It can be a way to diversify your investment portfolio. It can be a way to hedge against inflation. Here are some tips for maximizing your dividend income. Invest in companies that have a history of paying dividends. Invest in companies that have strong financial fundamentals. Invest in companies that are operating in growing industries. Reinvest your dividends to buy more shares of stock. Hold your investments for the long term. Dividend income can be a valuable source of income for investors. It can be a way to generate income in retirement, to supplement your wages or salary, or to simply grow your wealth over time. If you are looking for a way to generate passive income, dividend investing is a great option. 2. Capital gains. Capital gains are a type of financial gain that results from the sale of an asset at a price higher than its acquisition cost. This can apply to a wide range of assets, from stocks and bonds to real estate and personal properties such as a boat. When an asset is sold, the resulting capital gain is realized and subject to taxation. The specific tax treatment of capital gains varies depending on the type of asset and the holding period. There are 2 types of capital gains, short-term and long-term. Short-term capital gains are realized when you sell an asset that you have held for a year or less. Long-term capital gains are realized when you sell an asset that you have held for more than a year. Capital gains are taxed differently than ordinary income, usually at a lower rate. Capital gains can be a valuable source of income for investors. They can also be a way to reduce your tax liability. If you are considering selling an asset, it is important to understand the tax implications of capital gains. You should consult with a tax advisor to determine the exact tax rate that will apply to your situation. 3. Royalty income. Royalty income is the money you earn from allowing someone else to use your intellectual property. This can include things like patents, copyrights, trademarks, trade secrets. When you grant a license to someone to use your intellectual property, you receive a royalty in exchange. The royalty is typically a percentage of the sales or profits generated from the use of your intellectual property. Here are some examples of royalty income. An author receives royalties when their books are sold. A software developer receives royalties when their software is sold or used. An inventor receives royalties when their invention is manufactured or used. Royalty income can be a great source of passive income. However, it is important to understand the terms of the license agreement before you grant it. It is also important to have an attorney review the license agreement before you sign it. This will ensure that you are protected and that your rights are clearly defined. 4. Profits from businesses. Millionaires make money from profits in businesses in a variety of ways. Some of the most common methods include selling products or services at a profit. This is the most basic way to make money from a business. The business buys products or services at a wholesale price and then sells them at a retail price that is higher than the wholesale price. The difference between the two prices is the profit. Investing in other businesses that are profitable. Millionaires often invest in other businesses that are already profitable. This is a way to diversify their investments and to generate passive income. Passive income is money that is earned without having to actively work for it. Expanding their businesses into new markets. As a business grows, it may need to expand into new markets in order to continue growing. This can involve opening new stores, entering new geographic markets, or developing new products or services. Millionaires are often very good at finding ways to make money from profits in businesses. They are creative, resourceful, and willing to take risks. They are also able to think strategically and make decisions that will lead to long-term success. 5. Rental income. Rental income is the money you earn from renting out a property. It is considered a form of passive income, as it is generated without you having to actively work for it. Rental income can be a great source of income, but it is important to be aware of the responsibilities involved in being a landlord. Landlords are responsible for maintaining the property, finding tenants, and collecting rent. They may also be responsible for repairs, utilities, and property taxes. Here are some of the benefits of rental income. It can be a steady source of income. It can be a way to build wealth over time. It can provide tax benefits. It can be a way to hedge against inflation. Here are some of the challenges of rental income. Finding good tenants. Dealing with maintenance issues. Collecting rent on time. Dealing with vacancies. Complying with landlord-tenant laws. If you are considering renting out a property, it is important to do your research and understand the risks and rewards involved. You should also consult with a tax advisor to determine the tax implications of rental income. 6. Earned income. Earned income is money that you receive in exchange for your work or labor. It includes wages, salaries, tips, commissions, bonuses, net earnings from self-employment. Earned income is taxable income. However, there are a number of deductions and credits that can reduce the amount of earned income that you have to pay taxes on. These deductions and credits can help you to save money on your taxes. 7. Interest income. Interest income is money that you earn by lending money to someone else. This can be done through a variety of methods, such as savings accounts. When you deposit money into a savings account, you are lending money to the bank. The bank pays you interest on your deposit. Certificates of deposit CDs. CDs are time deposits that allow you to earn a fixed interest rate for a specified period of time. Bonds. Bonds are debt securities that are issued by governments, corporations, and other organizations. When you buy a bond, you are lending money to the issuer of the bond. The issuer of the bond pays you interest on your investment. Loans. If you lend money to someone else, you can charge them interest on a loan. Money market accounts. Money market accounts are similar to savings accounts, but they typically offer higher interest rates. Interest income is taxable income. This means that you have to pay taxes on the money that you earn from interest. However, there are some exceptions to the rule. The amount of interest income that you earn depends on a number of factors, including the interest rate. The interest rate is the percentage of the principal that is paid out in interest each year. The principal amount. The principal amount is the amount of money that you lend. The term of the loan. The term of the loan is the length of time that the loan is outstanding. Interest income can be a valuable source of income. It can be a way to supplement your wages or salary, or it can be a way to save for retirement. In conclusion, generating multiple streams of income is a powerful strategy for building wealth. By diversifying your income sources, you can reduce your risk, increase your financial security, and achieve your financial goals faster. The 7 types of income covered in this video are a great starting point for your journey to financial freedom. Remember, there is no one-size-fits-all solution, so experiment with different income streams to find what works best for you. As you build your multiple income streams, it is important to stay focused on your goals and to be patient. It takes time to build a successful portfolio of income streams. But if you are willing to put in the effort, you can achieve your financial dreams. I hope this video helps you in being one step closer to your financial goals. Please give a thumbs up on the video if you have enjoyed watching. If you have any questions, please leave them in the comments below. And be sure to subscribe to my channel for more wealth creation tips. I'd see you in the next video. Bye.